Peter Eliades with you. This is Stock Market Cycle's YouTube update for Thursday, very late Thursday. It's now 11:40 Pacific time, 2:40 in the morning on Friday morning, Eastern time. But there's a pattern in the market that is, I think, very, very important, and I want to share it with you. I've talked about the VIX Index recently over the past few months to tell you how important it becomes in a bear market. And I'm going to talk about that, in fact, exclusively that today, because I want to show you and share with you a pattern that I think is telling us that if we are still in a bear market, and I believe quite strongly we are, then we're looking at a market top right here and now. So let's get into it. Okay, what I've shown here, and I'm showing this on a weekly chart because I want you to get the perspective of the whole thing, okay? In between the red lines are the bear markets over the past quarter century, okay? This one goes from September 1st of 2000. I know that the S&P topped on March 24th, but the top on September 1st was within 0.5% of that high that was seen on March 24th. So for my practical purposes, and because the New York Composite Index also saw its all-time high on September 1st of 2000, I'm saying that's where the bear market started. And it ended right here in the week ending. These are weeks, remember. Now, I've translated the daily readings into a weekly chart so you can get the full perspective in the week ending October 4th of 02. The next bear market began the week ending October 12th of 07 and ended the week ending March 6th of 09. And the very last bear market, which I would contend is still in effect, began on the week ending, well, it says 12/31/21 here. I believe it was a week later, okay? Because the all-time high close in the S&P was on January 3rd of 22. Okay, so that's the background. That's the setup. The VIX Index closed today, April 13th, at 17.80. That is a remarkable reading in a bear market. And let me tell you why. I'm going to be referring to my notes. I put my picture in the middle here, not that any of you want to see it, but just so you can identify me. I put it in the middle so you can see the ends of this chart. Marvelous chart because it puts things in perspective for you. So here's the bear market, okay, from September of 2000 to October of 02. Now, what we're interested in is times when the VIX Index got as low as it did today or lower. So that's a reading of 17.80 or lower. Okay? It happened. First of all, another remarkable thing is at the beginning of each of these bear markets, that's almost exactly where the VIX Index was. It was kind of a marker. On September 1st of 2000, it closed at 17.53, just below this 17.80 reading that we closed at today. So between that day and the end of the bear market on October 4th of 02, there were only 4 daily readings at that level or lower. Let me give you the dates. And I've made little markers here. These, again, are on a weekly chart, okay? These vertical lines. March 22nd of 02, the close was 1777. The market never went higher than that through the end of the bear market. March 27th of 02, VIX Index 17.70. The market went up one more day, about between 1/10 and 0.2%. That was it. Never went higher throughout the bear market. March 28th of 02. Market never went higher through the remainder of the bear market. Look down here, okay? and finally May 17th of '02. So here are the March readings right here. And as you can see, we never went higher than that. Here's the May 17th of '02 reading right here in this week. Market never went higher than that through the end of the bear market. Okay. Those are the only readings lower than today's 17.8 that was seen in the whole bear market. September 1st of 2000, October 4th of '02. Let's go to the next bear market. Ended in the week ending October 12th of '07, okay? On October 12th of '07, there was a VIX Index reading. That was 3 or 4 days after the closing high. It was a new all-time high on the market. And several days later, we had a 17.73 closing on the VIX Index, okay? Just below today's 17.8 reading. The market never went higher throughout the rest of the bear market. You can see it right here, okay? Then we did not have a reading that low again on the VIX Index till May 12th of '08, a reading of 17.79, just a hundredth of a point below today's reading, okay? 17.79. Now, on that occasion, because there was a series of closes below the 17.80, they occurred on May 12th, May 14, 15, and 16, May 19, and May 20th, okay? So from May 12th, with a reading of 17.79, that was the biggest rally to be seen throughout these two and a fraction, whatever this one's going to be, bear market, that led with a reading that low. It was the only time that there was a rally of any significance at all. That rally from May 12th to May 19th was 1.6% on a closing basis. That was the greatest rally within a bear market that was seen with a VIX index reading this low. Okay? So that was May 12th. May 14, May 15, May 16. That was Wednesday, Thursday, Friday. May 19th, Monday. May 20th, Tuesday. Okay? Of the year 2008. Those were all readings below today's 17.8 reading. On the occasion of May 19th and May 20th, you never saw a close higher than that throughout the rest of the bear market. Okay? That was right in this area here. So from here down to here, never saw a close higher. Right in here was the only time you saw any kind of rally of significance after a reading as low as 17.8 or lower. And that was a 1.6% rally from May 12th to, I believe it was May 19th. That's the complete bear market, '07, '09. Here's the VIX index. Here's the one time it came down. Now, this week it came close, but didn't quite get down there. But let's say, if you want to count that week, you can. But look where we were on the S&P right here. We never went higher. So then, under my head here, all these weeks, and this is why it's an important qualification. This indicator, this reading of 17.8, doesn't mean a damn thing in a bull market, okay? Didn't mean a damn thing here, okay? Market kept going up, 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 up. Didn't mean a damn thing here. Market kept going up, 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 up. Big decline, up, 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 up. And look at all these readings below 17.8. Doesn't mean a damn thing in a bull market. But in a bear market, it is critically important, according to the history of the past quarter century. We're not talking something that I've shown you a couple of years of history on. This is 25 years of history. You can go back to 1998, 25 years ago. These are the only bear markets in that period of time. Let's come into the current time zone, okay? When did we see readings of 17.8 or lower? There was one right at the beginning of the bear market. The bear market began on January 3rd of 22. On January 12th of 22, there was a reading of 17.62 on the VIX Index. The market never went higher than that day. I'm going to switch to the daily now and show you these. Okay, this broad blue line, this horizontal line, is 17.8. Today's close right here, okay? This goes back to the January 3rd of 22, the broad red vertical line. Here's the all-time closing high right up in here. The only time since that day that we have seen a VIX index at 17.8 or lower is right here. As I told you, January 12th, VIX index closed, look in the box there, 17.62. Now that's being covered by all these arrows up here, but that was a high close right here on this day, right in here being covered up. And in fact, let me spread that out so we'll uncover it. There you go. It's a little clearer now, okay? Here's the day right here. January 12th of 22. Here it is on the S&P right here, okay? Never closed above that level since then. And follow the cursor line going across to the right here. Never closed higher than that, okay? January 12th of 22. Now follow the blue line across. 17.8, 17.8, 17.8. Nowhere near it. Nothing coming down to it. And now, here we go. This is today. Let's follow it back. Even on this day here, this day, which was the February 2nd high, the day before that, the VIX index closed at 17.87. So it was really, really, really close, but it didn't close at 17.8. If we say, okay, let's throw that in there, all right, you throw it in. Here's your risk up to the present day, from here to here, one day higher on a closing basis, okay? Never higher again. We're approaching it again. This is where we are. We closed today, okay? 41.46. This close was 41.80, rounded off, okay? So, this is all I have to show you. I'm not going to show you projections. I will tell you that the shorter term projections have all been met, satisfied at this close today on both the NDX and the S&P. But the most important thing to point out is this remarkable record, okay, going back for a quarter century. Anytime the VIX index closed 17.8 or lower, the results were remarkable. Within a bear market, you have to emphasize that. And this is why. I mean, look at this. There were hundreds of closes below this broad blue line as the market was coming up, okay? Hundreds of them. Didn't have any significance at all. But this level turns into magic in a bear market, okay? At least that's been the pattern so far. Can I guarantee you it's going to continue? No. You're looking at the same thing I looked at. I try to make it clear and try to point out the history of it to you. But that's what the history has been throughout 3 or 2.5 or whatever part of a fraction of a bear market we've been in so far. That was a magical level, okay? And that's it. That's what I've got to show you. Can we go higher? Well, let's put it this way. Based on the history of the indicator, or the reading, I should say, whether it's an indicator or not, based on that history, the largest rally we've ever seen after such a reading was a rally of about 1 week and 1.6%, 5 market days later. That's it. And that should be able to tell you within this pattern where we are at today's close. That's it for now. Okay. Just a quickie, like everyone asks, and it's helpful for those of us that do these updates. If you make comments, I appreciate them, especially if they're complimentary. But if you think you have some kind of grudge or some kind of criticism for what I've just presented, you're welcome to state that too, as long as they're reasonable. If they're not reasonable, if you're just trolling, I'll take you down. But if you have a reasonable criticism or a reasonable question, give us some commentary, hopefully positive commentary, in terms of what you're looking at and what you heard today. And a thumbs up would help too. So that's my update. As you know, I come here on average around once a month, maybe sometimes twice a month. Maybe I go a month and a half or two. But this is a very important time in the market based on the indicator that I've just shown you. I hope it works out for you, for us, and for everyone. That's it for now. We'll be talking to you soon. Thanks for watching.